Welcome to the VITV podcast. My name is Becco, and we have, again, special guest, Sunil Shah. Welcome back to the podcast.
Thank you. Same floral shirt because this was soon after the first one.
You wore it just for me, I take it.
As always.
Awesome, awesome. Well, Sunil, good to have you back. And if you guys haven't listened to the first part of this episode where we do a deep dive into Micron's history, please go check that out. And also, Sunil is a writer, and the analysis that we are doing here on this podcast is based off of his writing that's published on Seeking Alpha. So please go check that out as well. And I'll leave in the show notes his contact information and where you can find him on Seeking Alpha. All right.
Thank you. Thank you, Beko. And it's nice to be back.
So, Sunil, before we get started, for new listeners, can you give us a quick rundown of what Micron does, just high level?
Okay, high level, Micron makes digital memory. Okay, the DRAM and NAND you see advertised in your computer, in your smartphone. DRAM is like dynamic random access memory, which is more expensive than NAND. NAND works a lot faster than DRAM, so it's more expensive. Um, both types of memory have a wide and deeper penetration in our digital lives. So the prevalence and the demand for digital memory is increasing, um, you know, daily, monthly, because of the increased depth of data and digital content in the modern person's life. Micron is one of the three, the second largest manufacturer of DRAM, of just three that represent 97% of the DRAM industry. And it's in the top five of the NAND producers in the world. And within NAND, I think the top five players represent 97% or 90% of the industry. But both markets are an oligopoly, by which I mean a few players which have a commanding market share, and more importantly, in economics terms, there are barriers to entry into entering the industry. So we're going to talk more about that, but maybe it's a good time to start talking about that, because one of the key things for any attractive return on capital for any industry, as Buffett would say, it will inevitably attract new players. So how sustainable is your commanding position? How sustainable is your market share in an industry? And in digital memory, there are two massive moats, to use his term. What are the economic moats the business has? The one is the patents that have developed over the last 40 years in um, digital computing, in digital memory. You've had successive iterations of new technologies like um, you know DRAM 1, DRAM 2, 32 node, 32 layer NAND, 9064 NAND, 64 layer NAND, and you've progressively been increasing the areal in a nanometer of silicon, how many transistors you can squeeze onto it in terms of the number, in terms of the uh, compressing or miniaturizing the transistors, and all this required patents. So the first barrier to entry is the cumulative technology that has been developed in getting to the current state of technologies. For example, we're on DDR5 is the latest DRAM that is going to be used in your 5G smartphone. But to make DDR5, you need a cumulative licensing of all the technology from DDR1 to DDR5. In addition to that, you can't just start a factory, okay? To get a semiconductor uh, assembly line going takes months and years of experience in getting it perfectly right, and enormous amounts of capital. So the two barriers to entry, or economic moats, as Buffett likes to call them, are the IP that the current players hold, one, and two, the monumental fixed cost in making a fab, a factory that makes the um, current level, or modern DRAM or NAND, today's DRAM or NAND, the amount of capital cost required to make that factory.
Yeah, that was a good summary. I'd like to maybe throw in this one, which is in terms of the moat, you have, like you said, IP, you have capital intensive aspect of just getting into this. That's the price you pay to play in this space. And I would say
Exactly.
the third
Yeah.
one is this incredibly complex supply chain, this web of supply chain that you need to be able to erect.
Yeah.
You have factories in China. You got raw materials. You need to be able to source them, the right
Yeah.
right suppliers.
Yeah.
There's a huge complex web of supply chain. That's also
Yeah.
that takes
Yeah.
many years to perfect that as well.
Yeah. And maybe this is a great time to talk about one of the fears or threats to the digital memory industry, is the threat of Chinese competition. We know that China has a explicit objective of being more self-sufficient in semiconductors, but it's not just as easy as spending money, okay? Because the equipment that's required to make a current day foundry is using extremely sophisticated equipment that is just made by two or three players in the world. The etching or masking of silicon, where you have a light sensitive, um, photosensitive layer on top of the silicon, on which you etched the design of the transistors, the machinery that goes into that is just made by a handful of players in the world, maybe two or three players in the world. And with the US embargo list and the US sanctions on companies that are considered a threat, ASML is one of these companies that makes the masking technology to etch onto an integrated circuit. They have been told that if you sell to any Chinese company, you will be prevented to selling to any US company. Okay, so there are massive and rising obstacles to China in fulfilling their digital memory or semiconductors aspirations, because there are just a handful of players in the world who have the technology to build it. Then there's also the intellectual property, right, that goes behind the entire process. To have the licensing to develop the current level of DRAM, you need to have the licensing of all four previous iterations. Um, and so the big thing that people don't understand is, even if you throw billions of dollars that China's government does want to throw to be on their digital Silk Road plan, they can't buy the equipment, quite frankly, right? Because people like ASML, Applied Materials, will not sell it to them because they risk being embargoed by any U.S. company, which will not be able to which will they will not be able to sell to a U.S. company if they defy the U.S. Embargo list. Does that make sense?
That makes sense. I mean, do you think that? So, do you think that? Obviously, it is a threat still. So, how should people
Yeah,
size this up? I mean, obviously, there are
yeah,
threats. There are counter
yeah.
measures against these threats. But
Sure,
then, how should
sure.
we really think about them? Is it
Yeah.
is it
Okay.
immediate?
Yeah. This is the best way to think about it. Okay. This is how I've thought about it, which is clearly the best way of thinking about it. No, I'm joking. The determination of China to be a leader in AI, to be a leader in technology, will not be compromised. Okay, they want to be the global leader in blockchain. They want to be the global leader in semiconductors, and they do not want to import $600 billion every year of U.S. chips. Okay, however, even after the billions of dollars thrown at the industry, identifying leading players and funding them, right? They have not been able to produce current quality DRAM and NAND, right? The DRAM and NAND that China is currently producing, despite the unconditional aid, unconditional demands that Chinese companies use their product, the 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 quality of NAND and DRAM currently produced is 2 or 3 years behind the current products of Micron and Nvidia and AMD, etc. So there's a huge learning curve to get there, and the question of IP has already been challenged in courts. Micron successfully won a case where one engineer went to a Taiwanese company with a large cache of Micron secrets, and Micron successfully sued the Chinese company and its Chinese parent for IP theft, and that company is now obliged to pay Micron licensing fees. So my view is that despite China's determination, this is not just a question of throwing money at the problem. Okay, this is far more complex than um, than buying your way out of the problem. My other source of comfort is there is no way. Like, for example, the etching technology that ASML makes to mask to make masks on chips. 500 components are made by one or two players, like the lens that they use, right, to project the image onto the silicon wafer. Only Zeiss in the world makes that lens, right? So you can't replicate an entire industry, even if you're Chinese, if because you're not going to be able to replicate that Zeiss lens. You need to buy it from Zeiss, and Zeiss is precluded from selling it to you. So there are many obstacles to achieving the self-sufficiency they desire.
That makes sense. But it is interesting that you note that it's 2 3 years behind, which is not a big margin
Yeah,
from that
yeah,
standpoint.
but what I will say is even Huawei, that was obligated to buy Chinese chips for their phones, for their mobile phones, simply said, we can't use Chinese chips because they fail in quality, they fail um, in our quality control tests, and mass production. There's so many defects in their chips. I'm sorry, if you oblige us to buy Chinese digital memory, our products will malfunction all the time. So they refuse, despite government mandates, to use Chinese digital memory.
I think that's what it covers the Chinese aspect of this narrative. But
Mhm.
there's also non-Chinese competitors that I think we should touch on. So,
Um, let's see. I mean, there's in DRAM, there's basically Samsung, HK Hynix, which are both Korean, I believe. And in NAND, there are other players, but it's basically Korea, South Korea, Taiwan, and the US that make DRAM and NAND. The big overriding risk for which there is no answer is, will China one day invade Taiwan, right? And then they would have access to a whole host of um, memory IP and manufacturing facilities that would leapfrog their development. But I'll let Beko answer the question: will China invade Taiwan?
that's a I don't know. That's kind of a ominous
It's
question.
not.
It's an impossible question. Yeah.
Yeah.
But certainly there's lots and lots of things at stake there for
Yeah,
both.
yeah,
Let's move on to
and it has global consequences, right? It's not like Hong Kong. Taiwan is far more geopolitically important than Hong Kong.
absolutely. I mean, you just look at the semiconductor industry, like the high tech industry. A lot of it just goes through sort of these high tech power centers.
Yeah,
Korea, for example, Taiwan, Japan. If one of those countries are taken out of the global supply chain, you're going to have a global shock that's unprecedented, and it's going to be a
yeah,
cold winter for many months to come if that happens. So there's a lot. It's a lot at stake for sure.
yeah.
So let's talk about valuation now.
I'm going to dovetail the my narrative of the valuation with some of Buffett's principles. One of Buffett's principles is buy a company that has rising revenue or a rising market. Okay, we do have that. For Micron, we have an increasing penetration of digital memory in our lives. We have a um, widening and deepening vectors of memory required in phones, full service driving, internet at the edge. The list is massive. GPUs in data centers. Um, Micron has a very rosy future. The other thing that Micron has recently affirmed, as I said in the previous podcast, is they managed to stay profitable in the previous down cycle. What would traditionally be a boom to bust, 2018 was the bust. They managed to stay profitable, which is unprecedented in Micron's past. Not in one quarter during the deep trough did they generate a negative operating margin. Okay, the best valuation ratio that I can think of, which is called the EV to EBITDA ratio. The EV basically means the market value plus debt divided by the EBITDA, the earnings before interest, depreciation, and amortization and tax. Okay, so the EV to EBITDA ratio of Micron was never went very high because there was always the risk of a trough and losses, which they have now proved to have shed. The best proxy to Micron, in my opinion, is Nvidia, which has a niche in GPUs or graphic processing uh, GPUs, yeah, graphic processing units. Um, and the EV to EBITDA ratio of NVIDIA is about 40 times, whereas that of Micron was 4 or 5 times a year ago and is now about 10 times. So, on a valuation basis, they there's a lot of room for a re-rating of the share. Okay, and I'll send Becker a graph which he'll add to the presentation, which shows the rising trend in operating margins for Micron. Okay, you'll see a wave-like function, but the wave-like function is sine-like function is pointing upwards. And B, you'll see the comparison of uh, Nvidia's EV/EBITDA ratio compared to Micron, and both are provide lots of room. Sorry, I have to cancel leaving the slide. Both provide lots of room for a re-rating. Um, the return on capital is a key metric to be wary of. And Micron's return of capital is rising, A, because of the lack of losses in the down cycle, and B, because of the prospects of higher margins as we go forward. Okay, so the DRAM prices have just begun to rise after like a 1.5 year trough. And already Micron's margins are very respectable. So if you look at Micron's chart in the past, it had a sine wave function where you had good years and the bad years were losses. Okay, so you went into the red and then you went back into profits. Now, as I said, they've already shed their cyclical stripes of not having a so everything just opened up on my computer. Okay, sorry, it's all off now. Are you still there?
Yeah,
Yeah. Okay.
everything's still good. Sorry,
Okay.
everybody.
I'm
We're having
sorry.
a lot of
I'm sorry.
audio issues.
Yeah. Yeah.
Yeah, go ahead.
It's quite ironic we're talking about technology where we can't make our computers work.
Yeah,
Okay.
exactly.
Um.
All right, here we go.
So the sine wave of Micron has proved to be profitable in the last downturn and is about to rise. Um, we've seen a deepening and widening of their end demand from a whole diverse range of industries where they're not as dependent on any single industry as we've seen in cloud center demand in 2018 2019. So there you can have a tick in the checklist of deeper end markets, more entrenched use in the amount of digital content used um, by the world per capita. Okay, so those are all very powerful points. We also have um, the ability to earn substantial return on capital. Okay, um, as you have reduced the number of players in the industry, you they are finally in a position to earn a respectable return on capital. So in the past, when there were 30 or 40 players all vying for a slice of the pie, the industry was far less disciplined, and there was always the fear you'd be gonged out if you didn't have the latest product. Now you have three players who are very keen to obtain and generate a decent return on capital on a new plant that they make. A new DRAM factory costs up to $3 to $4 billion. You are not going to incur that kind of capex until you know that there is sufficient demand to fill your supply, right? So the traditional hallmark of oligopoly is the capacity to earn better margins, and we are seeing that unfold in front of our very eyes.
Okay.
Um, what? Yeah, carry on. You asked me.
Yeah, could I interject here and talk about the ratios, the EV EBITDA ratio, and sort of talk about that for a bit, and because you sort of use that as a way to drive the valuation for Micron
Yeah,
that it should be re-rated.
yeah,
One of the criticism of Micron and memory in general is that it is sort of a commodity. That it's sort of a
yeah,
commodity. There's like the price. If you look at the price fluctuations and how the market moves, it's sort of behaves like commodity. Whereas Nvidia with GPU chips, it's a little bit more advanced. It's more selective. It demands higher gross margin, and therefore
yeah,
it can get higher multiple EBITDA ratio or
yeah,
any other
yeah,
ratios that you want to look at. So
yeah.
how do you square that?
Okay, okay. So an EV to EBITDA ratio, which is, EV is the enterprise value of a company, the market value plus the amount of debt you have, right? So basically the amount the company is worth, market equity value plus debt divided by the EBITDA. EBITDA ratio is what we use, um, which is the kind of proxy for a PE ratio. Okay, so the higher the return, the growth of the company, the higher the P ratio. So Nvidia's EV to EBITDA ratio is a lot higher than Micron's. One, because they earn higher margins, and two, they didn't go into losses during previous cycles. Um, Micron has a large opportunity to re-rate because at the moment, as I'll show you in a graph that I sent to Beko, um, Micron's EV to EBITDA ratio is about 5 versus 50 for Nvidia. Now, Nvidia does demand or should have a higher ratio, but that gap is just far too extreme. Micron has already showed that it will not go into losses during downturns, and there's every possibility that Micron's profit margins will rise, and hence the return on its capital will rise. So there's massive room for a re-rating of Micron's shares.
So what do you think is the appropriate ratio there for
Higher,
Micron?
higher, and lower than Nvidia. We still don't know how much money Micron will make during this next upward phase of the cycle. Okay, I'm not saying Micron will cease to be a cyclical play, but the slope of the up and down cycles will be in an upward direction, and that in itself will merit a higher EV to EBITDA ratio. It will always be lower than Nvidia, which is currently 50 versus Micron's 10, and we don't know how much higher Micron can go. But there's no reason to put a ceiling on Micron at 20, 25, 30. It's all a question of how profitable Micron is during the upcycle, what the return of capital will be during the upcycle. What's also very important is that the deep boom to bust that Micron suffered in the past will now more likely be a plateau of rising earnings for a sustained number of years rather than one spike followed by a bust in the following year, right? Because we have a far more sensible supplier base and we have a far more diverse end user demand.
That makes sense. So so you would suggest that a lot of it depends on what we're going to see in the next coming quarters about in terms of how
Yeah.
they perform, obviously. But you're sort of pegging your valuation, with like maybe the 20 to 30 sort of
Yeah,
ratio that
yeah. So my
it
current target for
seems.
Micron, yeah,
Yeah.
my current target for Micron would be about a 15 to 20 EV EBITDA ratio. Okay, um, earnings will double from here, right? But so if the current EV EBITDA is 10, it'll fall to 5 as Micron doubles earnings. I reckon that ratio EV to EBITDA can go to 15 to 20 and still be a dramatic discount to Nvidia, and yet have a lot of room for a re-rating, if you see what I mean. So my current target price for Micron is $200. And you can see my article on Seeking Alpha exactly how I got there. Uh, but I maintain that we are still in the early innings of seeing how secular and sustainable the increasing demand for digital memory is. We know that we've bottomed out. We know that the end user demand has widened and got deeper. How high will DRAM prices go? Because even if you started a fab today, it would take 2 years minimum to produce commercial quality and quantity of memory.
Just out of curiosity, because we're talking about Nvidia, which produces GPU highly specialized GPU chips, whereas Nvidia is producing memory chips.
Yeah,
Have you looked into comparative evaluation to other memory producers? I know they're in different countries, but is there
yeah,
any?
yeah. Well, it's difficult because they're Samsung is not a pure play. Hynix is also not a pure play, and there isn't a direct proxy because 71% of Micron's revenue is DRAM, and no other company has that unique niche. The closest proxy, in my opinion, is Nvidia. Okay, so for the newest Nvidia chip uses 3 times as much DRAM as its predecessor. So, in my opinion, the growth rates of Nvidia and Micron will align, right? So, for every new Nvidia chip that's sold, the amount of DRAM used in the new chip will be 3 times as much as the old chip. So the revenue growth rates of NVIDIA and Micron will start to converge. But that's just in GPUs, right? You've got other vectors that Micron supplies. There is every possibility for the market to realize that Micron has demands and warrants a higher rating. One other thing I should just add here, which is probably a great way to close up, is Buffett has a very detailed list of what he considers to be, you know, essential criteria to be a Buffett pick. Um, I've mentioned that Micron has begun to show various characteristics which satisfy Buffett's checklist. And the best sign I can give you for that is his super clone, who people regard as Buffett the second, a guy called Manish Pabrai. Micron is his largest holding. Um, and for me, this is amazing confirmation of my thesis, because um, there is no way Buffett would invest in Micron. And this guy is an unashamed copycat of Buffett. Okay, but as I said, Buffett's whole mantra was, I don't want to invest in a business that does not have a 25-year history. But memory does. As I said earlier, if Nvidia's chip or AMD's chip become the new market standard in gaming, both use as their economics memory substrate, both use Micron. So you don't have to pick a racehorse for the GPU. The DRAM that is needed for both of those GPUs is Micron. Hence, the technology risk that Buffett envisaged has gone, and hence Manish Pabrai, the greatest clone of Buffett, has Micron as his biggest investment. So watch this space. I hope in the next, whatever, 12 months, we may well see Warren Buffett himself take a stake in Micron. And if he does, you can all buy me a floral shirt as well.
It's a great way to end the podcast. No, this was great. And if you guys want to check out some of Sunil's writing, please go check out Seeking Alpha. And I will leave his information in the
Yeah.
contact in the show notes.
Yeah.
Awesome. This was
Thank
great.
you.
And if you guys want to learn more about Micron, I also did a podcast. This is a little bit old, but maybe a couple years ago, I did a podcast on Micron that looks at some of the numbers that we mentioned in this podcast. So return on equity, return on invested capital. We looked into that in a bit more detail. We looked at their balance sheet, inventory management, all of that. So check that out also. Anyway, it was really good to have you again, Sonal. Despite
Thank you. Yeah.
despite a lot of the technical difficulties, we are
Yeah.
here at
Yeah.
the end of this. So
Thank you.
we'll
Thank
hope
you,
to see
Beko.
you
And
again soon.
yeah, maybe I could just add. Sorry, that was very um, what's the right word? Shackled together by technology interruptions. A very coherent and laid out narrative awaits you on Seeking Alpha if any of that seemed unclear. Thank you, Beko. Hope to see you soon.
All right. Thanks, everybody. See you guys in the next episode.